Meanwhile, global oil prices jumped higher after the Organization of the Petroleum Exporting Nations, OPEC and allies agreed to extend most oil output cuts into April. The move has pushed oil prices back towards their highest levels in almost about a year's time. Brent crude was trading up by almost about 5%, above $67 a barrel. Now, OPEC Plus had cut output by a record 9.7 million barrels per day last year as demand had collapsed due to the pandemic. Now, as of March, it is still withholding almost about 7 million barrels per day, or about 7% of the world's demand, and it has not ramped up its production levels to match it. Now, under the latest deal, small exemptions have ever been given to nations like Russia and Kazakhstan. Russia has been allowed to raise output by about 130,000 barrels per day in April, and Kazakhstan has been allowed to ramp up its production levels by 20,000 barrels per day to meet domestic needs. While outlining the deal, the Saudi Energy Minister Prince Abdulaziz bin Salman said that everyone is going to maintain the freeze. OPEC leader Saudi Arabia will be extending its voluntary oil output cut of 1 million barrels per day. The decision to gradually phase out the cuts will be taken in the coming months. Despite a recent oil price rally, the demand recovery from the coronavirus pandemic is still very fragile, and the OPEC group of oil producers are still trying to gauge the potential for stronger demand in the coming days. Now, Russia has been insisting on raising output to avoid prices spiking any further, but in February, Moscow had failed to raise the output despite being allowed to do so by OPEC Plus, as harsh winter weather had hit production facilities. The large oil-consuming nations such as India have already expressed their serious concerns about the recent oil price rally, to which the Saudi minister has responded by saying that India should start using the oil that it has already acquired in its inventory bought during the time of the pandemic when oil prices had collapsed last year. All right, now to give us more perspective in terms of how the price of oil is likely to fluctuate over the next few days, we are joined in by Dr. Andrew F. Ferris. He is joining us live from Hong Kong. Now, Dr. Ferris, thank you very much indeed for joining us in this broadcast on WION. And let me begin by asking you this. It's interesting that we've witnessed how the OPEC Plus nations are behaving. They've said that they will continue to not increase production to meet with the world oil demand. How long can we expect the OPEC Plus nations to not increase the production of oil?
Very little, because OPEC is famous for breaking up ranks when there is time, in fact, to make some money. I'll give you 3 points. One, this is an exceptionally short-termistic and I think incredibly ill-advised attempt to jack up prices, even if it is only for the short term. The reason for that, and that's my second point, is that these people haven't woken up to the fact that globally there is a huge move away from fossil fuels and oil in particular. So in other words, playing these games in front of a determined approach by the G20 and including China to use less oil is not clever. The third point is they should have been listening to what the Chinese have been saying now in their national meeting. This is the parliament meeting of China. And the program they've put forward for their greening, they are planning to increase and expand the utilization of electric vehicles. They are planning to reduce the fossil fuel emissions. And China was and is potentially the single biggest importer of oil, and it uses 55% of its oil for motor transport. Right. And increasing the price of oil is really, really unwise.
Now, at this point of time, because these OPEC Plus nations are perhaps not looking at a time frame of a decade, they're looking at the next 6 months. So over the course of the next 6 months, Brent crude is at this point of time trading at about $67 a barrel. Can we expect Brent to hit the highs of 80s that were witnessed before 2019?
Read my lips, no. And the reason for that, again, is very, very simple. The Chinese outlook for growth has been significantly cracked down. I wish these people will pay some attention and watch a little bit of television of what's happening to China. Not that China rules the world, but China is their single biggest, most important client. The second point is their expectation that shale oil producers in the United States will not jack up their prices. I don't know what they are basing this on, because they were the ones that hit the hardest when oil prices were down. And the third point is, yeah, I agree. They are looking only on a 6-month basis. And frankly, not because I think so or because I would tell them so, because that's what the world is going, is they have no long-term plan as to where the demand for oil and the sustainability of these oil prices are coming from.
I think that's an interesting point that you've made, but also in the immediate near-term future. Now, one of the reasons that's been put forth by the OPEC plus nations as to why they're not ramping up production of oil is because they say, look, demand is still very fragile. We do not know as to how long and how sustained this demand would be, because it is quite possible that there could be lockdowns and the demand for oil could plummet. Is that sound reasoning?
And it is completely against what they're doing. They're actually saying we expect that the demand is going to be fragile, and that's why we're keeping prices up. Hello? That's 101 economics. As an ex-professor, I will fail the whole lot, can tell you.
All right, we'll have to leave there. Thank you very much indeed, Dr. Freris, for joining us and getting us all those updates in terms of how oil and its pricing is actually driving politics at this point of time. WION is now available in your country. Download the app now and get all the news on the move.